Bunch of retail names are now on deck as we turn our attention to next week and some economic data. Of course, we're all talking inflation after the PPI today. Here to discuss is Jim Tierney, AllianceBernstein's chief investment officer for concentrated U.S. growth. Jim, welcome. Yesterday, inflation was going away, and today it's back.
I think we're going to have bumps along the way here. It's not all one direction. Certainly, labor continues to be sticky, and I think that's the biggest issue that we have to pay attention to over the next few months.
Or oil prices. I mean, I don't know how you feel about investing in the energy space right now, but that also appears to be headed, I don't know, maybe a little bit higher from here.
Certainly, you look at oil, which was in the $70 range, and now it's above 80, and we're certainly seeing that at the pump. I think the bigger question, particularly relative to consumer earnings, is does that pinch wallets and pocketbooks as we go forward into the fall, particularly with the student loan repayments coming in early October?
Do you think that's a big factor here, the student loan repayments? I mean, it's going to take some of the liquidity that might otherwise go into the consumer economy and redirect it into debt repayment. But how big is it?
I've seen numbers all over the place. I've seen anywhere from 25 to 45 million people with student loans and monthly payments on average anywhere from 200 to 400. So I think on the margin, it hurts.
Jim, one of the big themes for you this earnings season has been separating I got this wrong the other day, the wheat from the chaff, the strong from the weak, shall we? This hasn't really been a story about tech versus other industries. You're really seeing one company do great, one that's more struggling. Talk to us a little bit about these pair trades, if you will.
Absolutely. If you look at during COVID, many companies saw the same impact on their industry or on their business. So a lot of companies went up and went down altogether. Now that things are normalizing, particularly supply chains, we're starting to see companies in the exact same industry, one do really well and one not do quite as well. And that's being reflected in the market, which as an active stock picker, that's really exciting.
Why is Aptiv one that you're excited about? We're all talking about, the upcoming strike. It could affect GM, could affect Ford. How does it affect Aptiv? Why are you bullish on that name?
When we look at Aptiv and what's going on in terms of the transition from internal combustion engines to battery vehicles, that's a huge upsell or a trade up for Aptiv. I don't know who's going to win, whether it's Tesla or Audi or someone else, but I do know there will be a heck of a lot more electric vehicles on the road 5 and 10 years from now, and that's a huge benefit to Aptiv. So buying the picks and shovels providers is one of the themes that we chase, and certainly we think that's a very good story here in Aptiv.
Let's talk a little bit about a couple of the other choices you have. One is MasterCard and another is Schwab. Take us through those two.
Sure. When I look at a lot of the data points, it looks like U.S. travel is starting to slow down. We certainly saw that in Disney's earnings, where their hotel occupancy went from 90% last year to 84% this year on the domestic parks. But guess what was booming? International. Where does MasterCard make a whole lot of money? They make a whole lot of money on cross-border travel. So as that continues to pick up, particularly in Asia, I think there's further potential for MasterCard to grow their earnings at the rates that the street expects. In terms of Schwab, and it's a name that I've talked about before, the big bogey there was cash sorting and getting that behind the company. They got that behind them in the second quarter. They were able to pay down the FHLB borrowings, and that means you go from a negative interest spread to a positive one. And that's really going to help earnings as we get into the second half of the year, and particularly in 2024. And I don't think that's appreciated at $65 a share.
Jim Tierney, thanks very much. Jim Tierney, AllianceBernstein's CIO.